Yeah. All right. Let's go straight into it. Chart with your boy. Chart with your boy. Yeah. Let's see. Get them charts on the table. You know what? He's going. All right, bet. Go hop up into it. Go chart with your boy. Chart with your boy. Hey. Give me 1 second. Grab my bag. Cool. Alright, let's hop into it. Open up some charts. Just trade with your boy. Trade with your boy. Hey. Mark some charts. Continue education. Maybe pair. Look at forex.com. All right, yeah. So we in dollar yen, and we just go mark it up, man. Support, resistance, high probability areas, trends, and all that stuff. Just just go through it. It's like drawing. It's like coloring. It's like making music. It's all the same. So just get into it. All right. He's running in the bed, running in the bed. 3 day. Not sure. Now we got our range though. Marking up areas of high probability. Mm-hmm. I'm looking at now. All right, bet. All right, so I'm done marking up. So really, what I did was I went to the higher time frame, and I just marked the overall trend inside the channel. There's just general guidelines. Price can most definitely break through those zones. Most definitely break through the trend lines. But those are just general guides, right? And that's all it is. Then I marked up major support and resistance levels where price reacted strongly um, from my perspective. And then I just drilled it down to where we are now on the smaller time frames to the areas that we are to the area we in where price is reacting to those zones, that areas, all the way down to the 4 hour. Now, the way I look at it is like this: any time frame on a daily is generally going to show you price history from the last couple of weeks, the last couple of months, right? The same goes for the weekly. And then 4 hour is going to tell me the last couple of days, the last couple of weeks. You know what I'm saying? And all I'm doing is I'm just drilling it down to where I get that I get to take part of the long-term trend. The long-term trend, not the short-term, not the 15-minute, 1 hour trends, because they change regularly and frequently. So I want to be a part of that longer move, even if it's for a short bit. It's more, the probability is more accurate than me to go in on a 15-minute and a 1 hour and just scalp away. The purpose of this, the basic foundation is so that when you trade, you can trade running your job. You can trade full time. It doesn't matter how you choose to use it, but the purpose is to develop this skill to create a form of instant liquidation and long term, you know. So that's the value of forex for me. Instant cash flow when you need it on the spot with proper risk management, of course, and money management, and then a skill that you can master in the over the long term of things. And it's just crazy. Y'all just don't get it, man. It's up there with the top ways of using leverage and compound interest. So, but I just like marking up my charts. That's how I spend my weekends. I mark up my charts, I review, and I plan my trades for the week. So if you know me, if you've been following me trade and listen to me talk about trading, um, I've been long term bearish on dollar yen for the last couple of years. So much so that I might just have a confirmation bias against it, on it, not against it, but confirmation bias on it. But even if I do, it's still the same rules still apply. I'm looking for the best entry. In forex, you can make money on either side. You can make money as you buy price up or you sell price down. You can make money either way. And the key to doing it successfully and consistently is going to be knowing how to read the charts, knowing what the candles mean on an individual level and what they mean collectively, the story that they tell collectively, right? But then you're going to have to know how to determine in your trading plan, in your charting and your trading plan, what areas are likely to be key areas. Are there going to be a lot of retail traders at this area so I can get in and get out during high liquidation times? Or is this an area where there's going to be a ton of traders and bank institutions, bigger institutions looking, you know, to get in on the trade as well? So you're going to have to be able to identify this in your charting. And it's simple once you know what you're looking for. Um, like, how do you identify the trend? Well, the trend is easy to identify. The very first step in identifying a trend is identifying a pattern. And the simplest way is just look at the screen. Look at what you see. Just look at what you see. You can see the candles. You can see the patterns to it. You can see the price moves. You see price is moving down. Then it decides to come back up. It's going back down. Come back up. Down. Up. Down. Up. Down. Up. Down. Up. So you can see the patterns. So trading is subjective. So we trade what we see. Taking it a step further. Well, I see that price is going down here. I see the price came up here. I see that price has went down here. And I see that it pulled back a little bit, but it's not really going any higher, but it's not really going any lower. So how do you take it from that to being, okay, I need a strict definition of what's going to tell me what's the trend so I can get into the action now, a couple weeks later, a couple days later, maybe even a month or two later, so I can get in on that time frame and be a part of that, So with that, it's simple. I think everybody now is familiar with the terms higher high, higher lows, and lower highs. So those are used to identify the trend on any time frame, any section, any moment that price is in the market, or price is in the market, right? So let me go back down to the 4 hour. Right, so y'all saw me draw the trend line from here all the way up to here, right? So other than the trend line, how do you know that price is in an uptrend right now after seeing price make this big move down? How do you know that this trend is over, that down move is over temporarily or for the long term? We don't know. But what we do know is where price is right now. And this is where price has been since the beginning of May for dollar yen. Price has been running up, right? Since May, since the beginning of May, price has been making its moves up. So uptrend, right? Uptrend will always start with a low. So we got our low point, right? So we got our low, we got a high, we got a higher low, we got a higher high, right? Not that much. Got a higher high right here. Then we get this nice little pullback before price continues up. You'll be able to see this on a smaller time frame. But you know what I'm saying? You got our higher low, price up again, lower high, we got a higher high, right? And the price come all the way back, still creating a higher low, right? We got a higher low, we got a lower high. It's not higher than the previous high, but it's still a high. Higher low, we finally break above this structure, and we create our higher high. It's higher than the previous high, lower high, and we break above that, right? We broke above 1, 2, 3. Three structures of high to create a higher high and return for a lower high, right? So that move, that leg of a move is a bearish leg, right? From May 20th all the way to May 6th to May 20th, right? Now we're kind of sort of in this range, right? Lower high, lower low, higher high, same low, same high, lower high, right? This is a higher low or lower high, however you want to identify it. But check this out. This pullback is higher than these pullbacks and higher than these pullbacks, right? So if you look at the bigger moves, low, high, higher low, higher high, higher low. For this to be continued as a bullish trend, we need to go ahead and just break this high right here. And that's what I'm looking for. I'm looking for price to break this high. I would like to see price break this high. All right. I like to see price break the high. And I want to see it run up all the way up to this area somewhere, up here, before I'm going to continue, before I'm going to get into the trade that I want, which is I want to get in the sell and take that move down, right? So trading is a patience game. You got to wait for that move, and you will become more consistent and profitable if you stick to your bias. No matter which time frame you trade, stick to your bias and wait for price to line up with your rules. You don't have to switch biases every time on the time frames just because you want to be active in a trade. That's the worst thing you can do. You can take 1,000 trades and have horrible risk management, and you will never win in a game of forex. You can take 1,000 trades, have good risk management. You can make some money, but you can mess up your mind. You can mess up your psychology. You can you can begin to psych yourself out with a lot of trades just because you're taking unnecessary trades. Let's go down real quick to the 1 hour. Show what I'm talking about, man. Don't get me wrong though. You most definitely can. If you choose to scalp, have a solid money management plan, man. But I would recommend trading with the trend, trading that scalping with the overall trend, right? So I'm sell happy on dollar yen. And what I mean by scalping with the trend, look at all these opportunities. Show you 1 hour trend line, right? Multiple opportunities here and on a sell, multiple opportunities here on a sell, multiple opportunities here on a sell, right? Good, good. All right. So these are multiple opportunities over the course of a week, May 19th to the 29th, 10 days, right? You could have took how many trades? Starting on first. Oh, let's go back. All right. Again, using our definition to identify the trend, right? Downtrends always start with the high. High, right? We got a high, low, lower high, lower low, lower high, lower low, broke structure. I'm out. This is an opportunity to get in a trade. This was an opportunity to get in a trade. This was an opportunity to get in a trade. Uh, this was an opportunity to get in the sell trade. This was an opportunity to get in the sell trade, right? You had multiple opportunities to get in and sell trade following that small trend while price is still moving up over the next couple of weeks. You see what I'm saying? Then again here, right? We still got this high, we still got this lower high, right? So this make this a lower high, connect, boom. Lower high, we drop down, we go right back into that same lower high. That's another opportunity to get back into that trade. We break structure, create another lower high, lower low, pull back, creating a lower high, opportunity to get back into that trade. All right. We break previous structure again, right here, creating a lower low, right? Opportunity to get into the trade again when price pull back to that same structure. Sell, boom. We didn't get as low, but we broke it. We ran. So nothing. There's nothing there after that. We wait. We wait for the market to show us something. Now we're just waiting for the market to show us something. But this is all in hindsight, because the market is closed. But this is what I do every Sunday. I review and I plan. And I review and I plan. And I review and I plan my trades for the week because at the end of the day, my vision isn't to trade 8 hours a day. My vision is to trade at max 2 hours a day. You know, with the right account balance and leverage, I'm probably going to trade once every couple days. You know what I mean? Just to create the lifestyle I want, more time freedom, more cash flow, time freedom, cash flow to do what I want, when I want, how I want, and most of all to spend time with my kids with no interruptions, no distractions, and to give them what they want and teach them these same skills that I'm learning, that skills I didn't have growing up, skills, that was bigger, skills that was bigger than my parents, that they couldn't fathom, things that they couldn't see. I see more than what they saw now. So I'm most definitely a bigger thinker than what I was brought up into. You know what I mean? So for me to bring that to light, this is what your boy got to do. This is some other things you did. So this is my favorite pair, but let's see. Yeah, so I guess we'll call it a we'll call it a night. I'm not gonna lie, I'm tired. Um, but this is what it is, man. Like, come on, this game, it's not easy, but it's simple. It's simple. You can wait 15 minutes a day, study 15 minutes a day, 15 minutes a day. You know, you got to see the value in it now. You got to see what it's worth in the future. Not now, but in the future. You got to see the value in it, but you got to see what it's really worth in the long term of things, you know? So 2% a day. In 20 years, 2% is still 2%, but put a number on it. 2% of 1,000 today, that's what, $2? 2%, $20? $20, right? 2% of 2 million. What's that? We'll try to figure that part out. But you got to think that big. Taking the step starts today, though. It starts the moment you make that decision that you want something bigger, something better. There's nothing wrong with being content with what you have, but don't be content and not progress. So I'm always trying to progress. I'm always trying to level up, man. So tap in. I'm gonna share this on Facebook, YouTube, and just help people out. Like, comment, share. Like, no, I didn't learn this all stuff by myself, but I learned it. I took the time to put in that work, and now I'm giving it back. So tap in with your boy. Knowledge.